Number one, don't marry the wrong person. Number two, protect your assets. This Choose FI group, right? They kept preaching VT-SAX, don't do individual stocks, blah, blah, blah. I was like, well, man, you know what? It's really, it's your risk tolerance, right?
You're listening to the Millionaires Unveiled podcast, where you'll hear the stories and interviews of everyday millionaires. We'll unveil their decisions, their strategies, and their current portfolio allocation. Now to your hosts, Clark Sheffield and Jace Mattinson.
Welcome back to another episode of the Millionaires Unveiled podcast. This is episode number 238. Clark, what's going on? How's it going in your world?
Dude, doing good. Just got out of a softball game, which we play in a Central Park softball league, but it was canceled the last 2 years because of COVID. So finally, it started back up.
I didn't know you're a softball player.
I'm not.
Oh,
but it's fun to get out. Fun
nice.
To play.
Nice. That's good. Did you win?
No, we had a doubleheader and we lost them both. So that tells you how much of a softball player I am.
Oh, jeez. This is stick to golf and tennis.
Yeah.
You know, we were talking last week. Hot topic right now is the I bonds, and so we did a little more research. Given that I've actually never invested in any I bonds, have you, Clark?
No, I have not, and I think there's a reason for that. Right? We were looking at historical rates in 2008. Is the last time it was even maybe worth talking about. I got up to 5.6%, but from 2009 to 2021. It was, 1, 2, 1.5, 3, 2.5, and now all of a sudden it's shooting up and we're at 9.62.
Yeah, it's kind of got almost an inverse relationship with the market, so interesting. But quick facts, they are taxable on the federal level, which was interesting, as we were doing some research on these. The bond earns a fixed rate and an inflationary rate, which is why we're at 9.62, and it's why it's probably the highest it's been in over a decade, given that, interest rates for a long time were near nothing. So you got a maximum of 10,000 per year that you can purchase
per social, and you can have one for kids. You can't create a separate account for them, it looks like, but you can have one in their name. So if you're doing, if you have $50,000 and you're sitting on cash, it's not a bad thought for an emergency fund, right? 10 for you, 10 for a spouse, 10 for 3 kids. You're at 50 real quick if you're kind of just sitting on it, not knowing what to do.
Yeah, and you get penalized if you pull it out early, right? But you can.
Yeah, so it's a 30-year life, but you can pull it out at any time after, and you get penalized if you pull it out before year 5. So kind of 5 years is the safe zone. If you pull it out before year 5, you lose 3 months of interest. But not bad if you're going to sit there on it for 2-3 years, right? Pull it out. Yeah, you're going to pay taxes. Yeah, you're going to lose the 3 months. So maybe you net out 6-7%, right? If you hold it for a couple of years after the math is done.
Yeah. So if you're interested in learning more, treasurydirect.gov is a great resource. It's also where you can buy these directly, or, I didn't know this. You can actually buy them through your tax return if you want to paper, by mail, old school. IRS still accepts things by mail. So if you wanted to.
And the rate continues to change. So part of it is fixed and part of it's based on inflation. So as inflation keeps going up, probably here the next, at least year, that it sounds like that rate will be pretty similar. Just to give you an idea, May of 21 to October of 21. So about a year ago or less than a year ago, if you take that through October, this I-bonds rate was at 3.54%. And then in November of 21 to April, it was 7 and now 9.6. So that rate's good through the end of October here, starting May 1.
Yeah, interesting. So anyway, this week he works in the military communications and has a net worth of $1.9 million. Side note, he does have a nice, sweet car that he drives. And so we get into that and kind of how he has gone on his journey. Great episode with him. Last week we had Keisha. She had a net worth of $5.9 million. She was a corporate executive that grew up poor and has made a few career changes along the way. So great episode today with Carlos. And we'd love for you to leave a review on either iTunes or Stitcher or whatever platform that you listen on. We appreciate those as we continue to grow the show. And without any further delay, let's get into the episode.
Hey, hello, everybody. Thanks for having me on the show. I'm currently living in Stuttgart, Germany. I've been a satellite communication analyst now for the last 20 years or so, and enjoying life here in Europe. Currently got into investing in stocks, and this is a great place to be and a good time to invest.
Yeah, totally. And we're going to get into a little bit about that and your story and some other good stuff as well. But first, what is your net worth today?
Since I started tracking it today, we're currently sitting at $1.9 million.
Awesome. And how is that broken up?
So I've got $1.4 million in real estate. So that breaks down to 5 single-family homes. They cash flow about $107,000 a year. I purchased 3 foreclosures back in 2011 through 2012. The property values doubled in roughly 9 years. And as they doubled in value, I would do cash out refis and buy additional properties. In the stock market right now, I've got 1.16 million. So that's the total combined equals the 1.9 million.
Okay, so you said 1.6 in the market then?
Yes, 1.6. I'm sorry, it's 1.16 and 1.9 in, so 1.4 real estate, right? Stocks are 1.1 and total overall is 1.9 million. Okay,
so your real estate equity, how much is in your real estate equity?
Okay, so you're looking at, let me log in here real quick.
Because you're saying 1.4 million is the total amount of value, correct?
Yeah, I'm going to give you assets plus or minus liabilities, and that'll simplify it for us. So okay, I'm in real estate is valued at 1.4 million. Total assets would be 2.5. Liabilities are basically the mortgages.
Yep.
So 679,000. So net worth, assets minus liabilities equals about 1.9. Yes.
So the money, and then no cash, no HSA.
So basically, the assets or the cash is bundled into the assets. Cash 31,000 in Ally.
Okay.
Or total cash is 31,000, 22,000 in a savings account.
Gotcha.
And 9,000 in a checking account. So that's all bundled up into the total net worth.
Gotcha. Okay, cool. So the money that you've got invested in the market, is that in tax protected retirement accounts or in brokerage accounts?
So the money that's in the market, basically, I contacted my CPA once one of these stocks hit like 900,000, $1 million at one time. He basically said, hey, you could take out 300,000 before you go to the next tax bracket. So I already tried the 401k thing. I know that there's a way where you can actually have a 401k and invest in stocks. But honestly, I like the liquidity of, I want my money now. I can sell a bunch of stocks and I have the liquid if I need it, right? I like that flexibility. I don't want to have to wait 10, 20 years to have access to that money, right? So that's been my philosophy.
So you have nothing invested in a tax-protected account. All this money that's in the market is liquid. You could essentially sell it all today and put it in your bank account, correct?
Right. With, minus capital gains and all that. So
totally.
Like I said, I've got my CPA on speed dial, and basically I just, hit him up. He'll advise me, counsel me, what have you, and then I'll make the best choice. My tax shelters have been the houses. The
Yeah.
So those tax breaks have helped me out significantly.
Yeah, I want to get it because this is really unique, especially for the majority of millionaires. So I just want to paraphrase this all again. So we've got 1.4 million in real estate value, and the equity in that's worth about 900. You've got 100,000 cash flow, single family homes, no primary residence. Is that correct?
No, I've actually living in Germany. I rent. Here.
Okay, perfect.
Yes.
And then in the market, you've got 1.1-ish, and you've built that up over how long?
So, I don't want to scare you, but the last 2 months.
Whoa, no way. That's awesome. Yeah, that's crazy.
So I got booted off of the Choose FI group. They're like, no, you're trolling us. There's no way that you can make 300, 500,000 in a month, right?
Yeah.
So it's possible if you buy the right stock. So initially, what I was looking at doing is I did another cash out refi, and I was going to buy another foreclosure. But as you noticed, the prices skyrocketed.
Mm-hmm.
So then that's when I started to look at the stock market, and everyone in the ChooseFi group was do the VT Sachs, right? So I did that. Everybody's like, yeah, you put 100 grand in there. It's going to go, that's when you see real returns. So I did. I made 3,000 in 1 month. And then I started researching SPACs also and IPOs. So just by doing the research, I ended up buying 500 shares of QuantumScape, right? So I paid $45 a share. The next day it dropped, right? So I was like, oh no, what have I done? I'm like 4,000 in the hole. So then I started researching again and realized that they had a PR event coming up. So long story short, the stock shot up to about $120. I called the CPA and I sold it at, I think, 110 and 100, right? So I split it up. And I made $37,000 on that sale. I also bought COUV, a penny stock. I bought in like at 15 cents. It went up to 45 cents. I had like 300,000 shares, something like that. So I netted 72,000 on that trade. So I reinvested that. And that's how I was able to grow my portfolio so fast. So it was 100 grand cash out of pocket and then another 100 grand from this investment, these two investments, right?
Yeah. So what was the value a year ago? Do you remember?
The value of
your market holdings. Yeah.
Oh, okay. So, initially, when I bought a QuantumScape, like I said, it was 45. I had 500 shares. So I think I invested like, let me pull up the calculator real quick. It was about 30 something thousand. So 45 times 500. So 22,500, right? So when I sold total, I cleared $37,000 from that sale. And then the other penny stock, I mean, I was surprised that I made more in the penny stock than the other stock, right? But it goes back to the multiplier, your position. One of my mentors said a long time ago, hey, you realize the millions are in the pennies. So then it clicked. It's like, okay. So if I buy 1 million shares, right, and every penny that this thing goes up, that equates to, $10,000. So anyway, the COUV stock, it's up to like 85 cents right now, but I was also using margin, right? So I had a few margin calls. It's like, all right, well, I've got to pay this call and then go from there. So that's what really pushed me to sell some of the stocks, right? To cover those margin calls, right? Because I was waiting on another cash out refi. So my CPA is like, dude, don't pay off your houses. Interest rates are low. You're doing great in your stocks. Just stay with your stocks. So that's kind of how that happened.
Interesting. So how long ago did you begin trading stocks?
Okay. So I started, I want to say it was like late November, early December. The one that's made me the most money right now is TSMP, Humble Pay. These guys, I started tracking them when they were at 15 cents. So I dollar cost averaged to 27 cents per share. My position right now is 1,060,000 shares, and it was down a little bit today, but it's trading for about between 92 cents and $1, right? So it got as high as $1.93. Yeah, so the account jumped up to 2 million there for a little while. I'm not looking to sell anytime soon. This is one of those long-term stocks that you keep for the rest of your life. So that's the game changer there.
So you did not buy a stock until about 5 months ago.
Yeah, so you could say December of last year.
And then you built up this portfolio to $1 million in a few months?
Yes. So
trading.
I'll tell you what happened. So I was here in Germany, right? And you know how it'll be whenever you watch Netflix, they'll serve you up certain content.
Yep.
So I put it on YouTube and they pitched me this DW documentary, and it was essentially on the wealthiest Germans, right? So I'm watching this documentary. They showed the good old boy club. They're hanging out in their little private places and what have you. And anyway, the German guy goes home. He puts on Bloomberg, and then he says, I could easily make 50,000 euro in one day. The lottery is boring. So I was like, man, I need to look into this. So that's what sparked my interest, right? And that's how it began.
Interesting. So prior to last year, you had never bought a stock. That's crazy.
That is correct.
You've been 100% real estate until just a few months ago.
Yes. I was all about real estate. And again, the Choose FI group, right? They kept preaching VT-SAX, don't do individual stocks, blah, blah, blah. I was like, well, man, you know what? It's really, it's your risk tolerance, right? So me being in the military and having spent 5 years in Afghanistan, had some close calls. It's part of being there. I was like, okay, so I can take some equity out of my house. It's not doing anything, right? It's in the walls, not making me any money. Let me look into these stocks, and here's the result. I kind of wish I would have done it sooner, because it took me 10 years to basically double my real estate, right? Where, like you said, in 2 months, I made what I've got in real estate and then some.
Yeah, totally. I mean, it's been a wild ride, right? We've had, all
Indeed.
sorts of GameStop and all these stocks, right, that have just skyrocketed in a lot of ways. So at this point, with your strategy, I mean, is there temptation to just sell off the rest of your real estate and just, you've done fairly well trading, or are you moving more? Hey, I've got some quick wins here. I'm just going to move some of this money into long-term, buy and holds in the market, individual stocks. You mentioned that one that you have is a more long-term buy and hold strategy. Where do you kind of go from here with your strategy?
So essentially, what I'll continue to do is just keep investing in the stock market and basically continue to research disruptive technology. I mean, the first play that I did was an EV battery stock, right? And it paid off. So what I'll do is maintain some of the investments in the stock market, and as the long-term plays grow, take some of that cash, add to the real estate portfolio, right? And then just kind of see where I'm at. Continue to assess the situation, talk to my CPA mentors, and kind of go from there, right? I mean, the situations always change, right? So, and my biggest thing is you just got to basically research and invest in the disruptive technologies, fintech, the EVs, all of that stuff that's basically happening now, blockchain technology, cryptocurrencies, all of that is, the time is now. I think the way things are positioned in the Biden administration are conducive to adopting some of these disruptive technologies that are from some of the up-and-coming startups.
Yeah, totally. So do you invest in crypto as well?
As a matter of fact, I bought Dogecoin today and some Digibyte.
Okay.
For my first time ever.
Yeah. Nice. Today's a good day to buy, right? Things are dropping like a rock. Good. Do you plan to put that in as an investment strategy and part of your portfolio going forward?
Absolutely. With the company that I was telling you earlier about, TS&P, Tesoro Enterprises, they are basically Humble Pay. They've got a website, humblepay.com. I don't know if you heard of Brian Foote. They're calling him the Elon Musk of blockchain technology. He's been at it for the last 10 years. Gensler, the Security and Exchange Commissioner, was his teacher at MIT for blockchain. So there's a lot of stuff out there. All you got to do is just connect the dots. And basically, the way things are positioned right now, I think this is going to be a huge year for this company.
So let's switch gears here just a little bit. We've talked a lot about the market investments, but you also have quite a substantial amount of portfolio in real estate. How did you get started in real estate? I know you mentioned buying these foreclosures. Why did you choose to go into real estate? And maybe kind of talk about that journey from buying that first deal to, continuing to acquire some and get the cash flow. Because the cash flow you have off these, now is phenomenal.
Right. So it was one of those things, right? Like every war story starts. So there I was in Afghanistan. It was Thanksgiving 2010. And there was this fellow in front of me. We were waiting to have our Thanksgiving meal. He turns around, he introduces himself. He's like, "Hey, I'm Mark Stroh's like the beer," right? So I never forgot his name. So he's like, "Yeah, I own 10 houses. I just paid for my kids' college in cash." I'm like, "Man, I want to be like Mark," right? So in 2010, the chatter on the news was home prices are at historical lows and interest rates are at historical lows. So I was like, man, it's time to invest in real estate. So that's how that happened. Basically, I started looking at foreclosures. I started off in Tucson. It kind of went from there.
Why did you choose Tucson?
Because I lived there before and I've got family there.
Okay.
Right? And
yep,
so basically, one of my mentors said, "Hey man, if you're gonna jump into something, build your coffin in your own backyard." It's like, all right, dude, cool, got it. So that's why I started there. And
Yep, makes sense.
I've got, what is it, four properties there. I got one on James Island, South Carolina. So really, and you get the naysayers, oh, you're never going to rent them out, blah, blah, blah. But long story short, the longest vacancy I've had was probably 2 months, maybe 2.5 months.
Do you have property management there locally?
Yes. I've got a property manager in South Carolina and property manager, basically what you need, right? The property manager, real estate agent, the banker, painters, if you want to do that, do the maintenance side of it.
Yeah.
You just got to have those people in place, and you're going to hear the horror stories. Are they going to mess up your house? You know what? I've got homeowners insurance. Mm-hmm. So, right. I mean, there hasn't really been any situation where I have not came out ahead with either, the appreciation of the property, the tax breaks. I mean, you will come out ahead. If you buy at the right price in the right neighborhood, you should be okay.
Yeah. How did you acquire the one in South Carolina? How'd that come about? Did you live there too?
I did. Okay. I lived out there for about 10 years. When I got out of the military in 2001, that's where I got my first contracting job.
Okay, so that's former primary residence then?
No. Oh, let me tell you about my former primary residence. So I think this is one of the later questions that you asked about making mistakes. So I bought a condo in 2007 for $127,500. I think, that was the appraisal price. I paid $112,500 for it, literally within 2 to 3 months, the housing bubble, right? So it went down to $40,000. I had remodeled it. I was going to flip it. It didn't happen. So I wrote it out. I didn't do the short sale, and I just sold it last year for around $110,000. So I made a little bit of money, right? Sold it at a loss, so didn't have to pay any capital gains or anything. But that was my first bad real estate investment.
Wow.
So, yeah, it was just the timing, right?
Yeah, timing.
The market recovered. It took 10 years, but it recovered.
Yeah. Interesting. So the homes that you have, you'll just give our listeners a little bit of a synopsis. What's roughly what do they rent for, and how long is your average tenant staying there? Okay, so they normally they do a 1-year lease. They rent anywhere from $1,300 up to $2,500 based on the area and the square footage of the house. Yeah, that really, as far as the turnover, is not very high. Like I said, the longest vacancy I've had has been about 2.5 months. So it goes back to the quality of house that you buy too. Yeah. And also as an owner, right? If, for example, in Arizona, it gets hot, right? 110, 120 degrees sometimes, your air conditioner is going to go out. You plan in the budget for that. And if the property manager calls you, says, hey, guess what? The air conditioning is out. We got the repair guy on the way. Can you put the tenants up in a hotel? Absolutely. They can stay there as long as they need to. Why? Because they're making that mortgage payment for me, right? So yeah, I'll get back a little because I'm going to write off that hotel stay that they're staying at, right? And they're going to be like, oh man, this guy takes care of his properties. You don't want to be a slumlord, to say the least, right? Yeah, totally.
So maintain your property.
Awesome. So I want to ask, you've built up this portfolio in the market super quickly. Your real estate portfolio is kind of rocking and rolling. As you make money and make more money, how do you think about where that each dollar goes to invest? Do you allocate some towards real estate? Do you allocate some towards staying in the market and buying a stock? How do you think about that?
Right now, what I'm looking at is the long-term plays in the market. And as that gets to a certain point, say my long-term play that basically if it gets to $10, I'm looking at $10 million. If it gets that high, what I would do is call the CPA and discuss with him what the best move is. Do I buy, a multifamily place? I would also discuss that with my property manager in Arizona. And basically, this guy, is it okay if I say his name, his company, or?
Yeah, whatever you want. I mean, it's up to you.
The company is Bancroft and Associates, and I've had a working relationship with them for about 10 years now. So I could call Glenn and ask him, hey man, should I buy commercial real estate? And he will basically say no because Amazon is killing a bunch of commercial real estate places. So that's a scenario that actually happened when I called him. So he basically said, hey, right now, stick to single family homes. Okay, we'll do that. Thanks. But yeah, that's basically what I would do. Reach out to the guys that I work with already, that I have that business relationship, and discuss with them what is the best move, right? So, so I will continue on the real estate, and as the portfolio grows and there's more funds to play with, kind of see what the professionals advise me to do and then go from there.
Yeah, totally. Is 10 million, is that kind of the goal to get to?
I think that's basically I can walk away from my job and then say, yeah, I can do other stuff now. But I don't know. I'm kind of like at the point where I don't know if I can really sit at home, and there's only so much golfing you could do every day, right? So
yeah, man. Well, that's awesome. So I want to get into some rapid fire questions, but before we do, is there anything, I know you mentioned the mistake that you made with that purchase, and some of that was timing, but is there any mistakes you've made or advice that you would caution, investors with, given that you've ramped up some of this so quickly in the market and, real estate, you've got quite the extensive experience?
What age group do you want me to target? I mean, I don't know what your target audience is.
Yeah, any age group, really. I mean, maybe that 25 or 30-year-old just trying to get started would probably be best.
Okay. So I'm glad you brought up the younger guys. Number one, don't marry the wrong person. Number two, protect your assets, right? And just do not be afraid to seek professionals, right? Like CPAs, property managers, other real estate investors.
Totally.
That kind of thing.
Yeah. No, I think that's great. So what's the most expensive pair of pants you've ever purchased?
Let's see. I don't go out and buy crazy designer stuff. Say maybe $40, if that, $50 for a pair of jeans.
What about the most expensive pair of shoes?
€90 in Sicily when I was there on a business trip. I bought 2 pair. The guy, I talked him down €10, so I paid €90 per pair of shoes.
Nice. What about the most expensive meal that you've paid for?
I think it was one of those tomahawk steaks. I think it was overrated. It was like maybe $100. Yeah, I wouldn't do it again.
Overrated. That's funny. Okay. What age were you when you became a millionaire?
48 this year.
Okay. Do you know what your annual household spending is?
It's not much. I really don't look at it. I know it's kind of like, you should have a budget. Basically, with the cash flow that I have, the expenses, rent's about $500. I have a car payment, $700, and let's see, child support, $642. And that's really, my Starbucks. I do the filter coffee with a splash of coconut milk. That's $2.45. So lunch, about $6, maybe $10 if I splurge. So yeah, not a whole lot. I mean, I don't.
So you're living on maybe $30,000 a year?
Probably, maybe even less than that. Because right now I can't really travel, right? So with my job, they basically, when I travel, they get, you get hotel, rent a car, meals, per diem. So really, I don't splurge. I don't have to. So not that I'm saying not to come across as, this guy's stingy. He's cheap. Yeah, I mean, right now I can't really travel. I'm in Europe, which it's a beautiful place to be. It's a different vibe altogether. But yeah, when I do travel, I might spend maybe $400 or $500 on a weekend. Mm-hmm. Hotel, eating out. But yeah, it's not super. It's not overspending, if you will.
Yeah, totally.
Considering where I'm at, right?
Well, what's the most?
And the cash flow really offsets any of those expenses. Go ahead.
Yeah, for sure. What's the most expensive car you've ever purchased?
I've got a 2020 BMW 530i. Sticker price was like $62,000. Here with the military program, they took like $15,000 right off the price, so that's like basically depreciation, right? So that's probably it. So
that's
$48,000.
That's a nice little ride, right? Is that what
I like it?
Is that what you splurge on? Is the car?
Yeah, basically the $700 a month. Yeah. So I mean, the stock goes up, and Whenever the account hits over 2 million, 2.2 million, all right, I'll drive my Beamer today. I like the seats, you know?
Oh, that's
seats,
awesome.
The heated steering wheel.
Yeah, man. No, dude, you're a millionaire, dude. You don't gotta apologize to me, man. You're buying $2.45 Starbucks and you're driving a BMW. You're worth a couple $1 million.
With coconut milk. Yeah.
Renting for $500. I mean, hey, to each their own, man. I love it.
Yeah.
That's awesome. What's been the range of annual income as much as you're comfortable sharing throughout your working life?
Sure. I'm glad you asked. So as a kid, I had a paper route. So that was maybe $150 a week, a month. Real salary started when I got out of the military. That started at about $53,000. This is in 2001. From there, the goal was to make $100,000. That happened in 2004. Started making 150 G's, got divorced, right? Ended up homeless, bankrupt, all that stuff. So I ended up taking a job as a trench digger for the phone company, Bell South in South Carolina. That was paying like $10 an hour. And Alvin Abernathy, he was a Vietnam vet. And he's like, hey, man, if you made $100,000 without stealing it, you can make it again. So based on his advice and what he said, I was able to recover and get back into contracting. So that was $9 with the phone company, digging trenches. It went to $150,000 doing satellite communications in the Middle East. And then I started working at a paint store, and just basically by meeting the right people, I met one of the biggest painters in Charleston, South Carolina, Don Metz. And come to find out, we had a link to Fort Polk, Louisiana, the Joint Readiness Training Center out there, JRTC. Because I came out of the back sweating. They didn't have air conditioning from stacking the 5-gallon buckets of paint. He's like, hey, man, you've been here a week. You're already running the register. He's like, what's up, man? I'm like, yeah, it's hot back there, but it's not as hot as JRTC. He's like, I was there. He's like, I'm going to call so-and-so. You need to be outside sales. So that eventually led to having my own business. Met a developer in Charleston, South Carolina. As a matter of fact, he's a politician now. Real good guy. William Cogswell, and you can Google him. Weka Construction was one of his development companies, but real great guy, good mentor for me. So with him, he basically said, "Hey, I'm going to give you a jump start." He basically gave me a check for $5,000. He's like, "Here, get your truck, get your license. I got you," right? So not even a year and a half later, I was sitting on $1 million worth of contracts for drywall, painting, concrete work, that kind of stuff. So along the way, you meet the right people, you do the right thing, things will work out for you.
Yeah, no, that's awesome. What books or products that you use or utilize or would recommend? As
far as the products, for real estate, I was checking out Bigger Pockets, right? BiggerPockets.com. I found out the other day that the real Wolf of Wall Street, right? The guy that started pushing penny stocks. He read Think and Grow Rich by Napoleon Hill. I can accredit my mom's first house to that book. And I think I only read like 2 or 3 chapters out of that book. Choose 5 groups, stock twits, Wall Street bets. And most importantly, I would say invest in yourself. Maintain a positive mental attitude and continue to pursue your dreams, goals, and aspirations.
Yeah, no, I think that's great. Just to wrap up here, you've got this goal out there, maybe 10 million. You say you'd finish, quit, work on your own stuff. Do you upgrade the Beamer when you do that? Do you buy a bigger house? I mean, what does that vision look like when you get there?
So I think it would actually be downsize Belize. Go back to when I was a kid in California. The first time I cut school, I went to the beach. I'm not recommending that your listeners do that, but anyway, Belize looks nice. I think that's where it's going to be at. Water. I can fish, jet ski, lounge around, drink margaritas, that kind of lifestyle.
Yeah, no, that's awesome. Well, appreciate you coming on the show today. Once again, that's Mr. Fig with a net worth of $1.9 million. Appreciate you coming on the show today.
Thank you for having me.
Thanks for listening to the Millionaires Unveiled podcast with Clark Sheffield and Chase Mantinson. For more stories, investment opportunities, and information, check out our website at millionairesunveiled.com. See you next time when you'll hear from another everyday millionaire.